I have one question for you. Are you having some fun? Are you having some fun? Are you not entertained? Oh, baby. A lot of money out there, folks. Another $29,999 up in the public account. Here today, well over $2.8 million in that portfolio. We have stocks like Palantir just running right now. This one's getting close to a 700% gain for us now at this point in time, up another 4% here today. Every time you think Palantir, the move's got to be done, it just finds another level. SoFi is burning hot the past 2 months. Like literally, this is arguably the hottest stock in the stock market the last 2 months. Incredible move. We're now up 120 percentage points on the stock, and much of that has come in the last 2 months. Tesla continues to roll, now up over 2,500% on this 1,000 shares in the public account here. What's crazy about this, look at the cost basis total, $13,549, and that $13,000 is now worth $353,000. Incredible. The stock market can be a lot of fun, right? On a stock, this is a stock we were down massively on at this point last year, right, on these 50,000 shares. And now I'm up $79,000. What an incredible move. Another 6% here today. This stock is beyond hot. It's a whole other level, right? Alrighty, 3 subjects I want to cover in today's video that are very important that I think everybody needs me to cover. First one up here. Why is every dip getting bought up, right? We're going to discuss that at the beginning of this video. I think it's very important I address that. Second thing is, why are some stocks sucking so bad in this market? Which I think is a very fair question, because this is not every stock goes higher. There are certain stocks that are performing absolutely tremendous, and then there's other stocks that seem like they can't get out of their own way, and it's like, oh my gosh, will this stock ever go up? We'll speak about that in this video. Third thing we're going to discuss in today's video is a new stock I bought today, brand new stock. I never bought this stock before. I've thought about buying it a million times in the past, and I finally did it here today. I put a lot of money in the stock, and I got a lot more money coming into the stock likely over this next bit of time. We'll discuss what stock that is and why I went ahead and did it. There's one thing and one thing only I need from you guys, one favor. This video took me several hours to prep all this for you guys. I hope you appreciate it. I hope you enjoyed it. I need one thing from you, and that's to hit the like button on this video. That's it. I hope it's not too much to ask. The sign in my garage says it, and like the sign in my garage says, if you want to be subscribed here, you can feel free to hit that subscribe button. It's absolutely free to do so. I appreciate y'all for being here as always. Additionally, this time next week, our one-day sale is going to be going on, our Black Friday sale for 1000xstocks.com. So if you want access to that sale, pinned comment down there, click on that, enter in your name, your email, and if you want to receive it via text, we can send over the deal via text on that Black Friday. Keep in mind, you might want to do that because I'm telling you, your inbox is going to be flooded with spam from all these companies that are going to send you a bunch of offers that you don't even actually want, okay? So for those of you guys that are serious about getting that 1000x deal, you might want to put in your number so we can text over the deal. It's one day only, and when it's over, it's over. Let's get into this, folks. Very important I start right here. What is going on? Why is every dip bought up? I'll tell you exactly why. Listen, check this out here, okay? This is a 1 month chart looking at the Russell 2000, the Qs, just think of that as a NASDAQ, and the S&P 500. We had a dip here, it was bought right up. Then we had another dip, it was bought right up, right? And then we had a recent dip here, and look what happened again. They bought it right up, right? So every time the sellers seem to step in and take stocks for profits, buyers step right back in and say, no, we're going higher here. Why is this? Well, there's several reasons here. Reason number one is we got $7 trillion plus now. That's in money market funds, which is just a ridiculous number. And it just keeps growing bigger and bigger and bigger. And we don't know where the top is for this number. Maybe it's 7.5 trillion, maybe it's 8 trillion. But the bottom line is all this money in money market funds, it keeps collecting all this interest, right? If you got money in a CD account, your cash pile, listen, I have money in CD accounts, okay? I have money in savings accounts, right? I'm getting 4+% on my money, right? So I think 4.2%, 4.4%, 4.6%, somewhere around there, right? All that money I have in my CD accounts and savings accounts, guess what's happening every month? It's growing bigger and bigger and bigger, and the cash pile keeps growing bigger. Now that money's sitting over there chilling. I could just keep it over there chilling, right? Or maybe at some point in time, deploy a portion of that into the stock market. You got to understand, I'm just one little teeny fish in a massive ocean of money that's out there. And so you got to understand, there's people that have millions of dollars, tens of millions of dollars, hundreds of millions of dollars, or even billions of dollars that are just sitting over there in treasuries, sitting over there in CD accounts, savings accounts, with the money just growing bigger and bigger and bigger month after month after month, and just considering like, what am I going to do with this money? Am I going to keep it over here? Am I going to deploy it into the market eventually? Am I going to buy real estate with it, right? But that money's just over there. And that gives a huge amount of confidence in the market. I mean, a massive amount of confidence. And you know why? Because if there's any major drops, guess what's going to happen? People are going to, like, let's say, what do you think I'm going to do if the S&P 500 goes down 15% over the next 2 months? I'm going to take a good portion of my money that's chilling in CD accounts, savings accounts, and all that, and bring it into the market, right? That's the same thing you could say for a vast amount of folks. And that makes it hard to get any substantial crash here in the short term, or any even, like let's even call it a 5 or 7% dip. I'm not even talking about a 20, 30% crash in the market. I'm just talking about a 5% like correction, 7% correction. Even those it's hard to get because people have so much money over there on the side that any little drop, they're going to deploy something in the market, right? Because, somebody might say, oh, I want the market to go down 20% for me to take money out of treasuries and out of savings accounts and put it in the market, right? Somebody else say, I don't need that. I need 10%. Market goes down 10%. I'm going to do it. Somebody else says, I don't need that. I need 5%. Somebody else says, dude, I don't care. 1%. Give me 1% down and I'll put it in the market, right? So that's what you got to understand. And it gives a huge, huge level of confidence around the market. Also, the top might be in. What do I mean by the top might be in? This is what I mean. When it comes to treasuries, the top is in regards to what treasuries are likely going to yield in this particular cycle. It's very obvious that we are trending down, and we should continue to trend down over the next years in regards to how much treasury should be able to get you, right? What's basically transpiring now at this point in time is lower highs and lower lows when it comes to the treasury cycle. So like recently, we probably set a more recent kind of top in regards to treasuries. And then when we go lower, we're likely going to even face a lower low when it comes to treasuries than we have faced in the past, right? And so in regards to that, that matters significantly to the stock market because as treasuries go lower, as those yields go lower, as CD account go lower, which as somebody that's collecting a lot of money in CDs and all those sorts of things and savings, like, I wish they didn't go down. I would love them to stay 4+%, if not 5%. But the reality is, if I look out a year from now, I'm likely getting lower returns on CD accounts, savings accounts, all those sorts of things in treasuries a year out from now than I am right now, right? And so that's important to understand is that money just has to end up going somewhere because, especially once treasuries start yielding in the threes, that's the moment a lot of people say, treasuries kind of suck now. At this point in time, we got to move money elsewhere, and a lot of people start looking into the market. When treasuries are yielding 4 or 5%, a lot of people say, you know what, I'm okay over here. As soon as you get into the threes, that's when people begin to change their minds. And then never mind if treasuries ever go in the twos, then people are like, screw treasuries. You can't even keep up with inflation at that point in time, right? Point number 2, we got through earnings season. We got through. And not only did we get through, we thrived. If you look at the Mag 7, the stocks that matter the most in the stock market, as far as weighting, as far as commentary, as far as the sentiment goes, the earnings were good from pretty much all those companies. Look at the revenue beats from these companies. Look at the earnings per share beats of these companies. Look at the margins. Look at the outlooks of these companies. It's phenomenal. And they all set up great into 2025. Like there's not one of those stocks that I'm looking at right there that I believe their earnings per share will be down in 2025. Not one of them. All of them will have earnings per share up. It's a question of how much will those earnings per share up, and it depends on which company we're talking about. Some of these companies might be in more in the 10 to 20% earnings per share up next year. Some of these companies I'm looking at right there will be in the 30, 40% range. Some of them will be 50% plus when it comes to earnings per share growth in 2025. So we got through the earnings season, and the outlook, it's going to be a very good 2025 for these companies as well. And that leads us to the boogeyman. You ready to talk about the boogeyman? The boogeyman is nvidia. nvidia, every quarter, it's the boogeyman in the market. What's going to happen with nvidia? Maybe growth rates are going to slow. Maybe the commentary is going to be bad. Maybe no one's going to order chips anymore. Oh my gosh, there's always like this big concern. Oh, nvidia, what's going to happen? The boogeyman, it's out. They reported a banger. It was an A-plus quarter. I posted this on my X page. It was unbelievable. By the way, if you ever want to follow me on X or follow me on Instagram, I always have that linked in the description area of all my videos, just so you guys are aware, right? I know, obviously not as many people follow me on those platforms as follow me on YouTube, but if you ever want to, I'm on those platforms as well, okay? But yeah, A-plus banger quarter. The guidance was phenomenal. Conference call phenomenal. You got nothing you could poke holes at when it comes to NVIDIA for this next year. 2 years out, maybe that's a different situation when we talk about 26 or 27. But as of right now, you got nothing. You got nothing on this company to poke holes at right now. It's just an absolute banger, right? Now, check this out here. I thought this was very important I show you guys this. This is very important. It's one thing to look at returns of the stock market. It's another thing to think about the returns of the stock market over a several year span, adjust it for inflation. Not something we talk about a lot on the channel, but it is important, especially when you've gone through a higher inflationary environment, which, guess what? The last 3 years were definitely a higher inflationary environment. Inflation died in 2024, but there's no doubt 2023 we were elevated. In 2022, obviously inflation was out of control, right? So what are returns looking like for the Russell 2000, for the S&P 500, and the Qs? If you don't factor in inflation versus if you do factor in inflation. And get ready to have your mind blown here, okay? So this shows you the last 3 years of the stock market. In the last 3 years, the Qs are up around 28%. The S&P 500 is up around 27% in the past 3 years. And the Russell's actually negative in the past 3 years, right? Now, we've had about 13% cumulative inflation roughly over the past 3 years. So if we factor that 13% in, the reality is the Russell 2000 is actually down 13% over a 3-year span. Now, when we talk about over a 3-year span down 13% on a major index like the Russell 2000, that kind of smells like you went through a market crash, you went through a major recession. Because usually the Russell's not going to be negative on a 3-year basis. And especially when you're factoring in inflation rate of roughly 13%. So it's a negative 13% return over 3 years. That's not normal, folks. S&P 500, if you factor in inflation, is only up 14% in the past 3 years. That's a horrible return for the S&P 500. The S&P 500 should usually get you 8 to 10% per year. And it's got you 14% over the past 3 years if you adjust for inflation. That's awful returns. And especially when you think about, we've been going through, all the exciting stuff in regards to AI, and the biggest tech stocks have done pretty well. That's incredible to think about. Additionally, you look at the NASDAQ. The NASDAQ's up 15% in the past 3 years with all these great companies report all these great numbers, the Metas and the Nvidias and all these sorts of companies like Microsoft, Amazon, and that's what we have to show when you adjust for inflation. That's not actually good returns at all. That's actually poor returns. It actually looks like if you weren't to have any other context, and I just ran you through those numbers, never mind if we went back before this kind of most recent run, right? You would kind of think like, well, we had to have a big recession in the last few years. Like, that's what you would think. And no, fourth reason up here, right? And so just keep in mind, like, the indexes are actually not like super high like they're talking about. Fourth reason every dip keeps getting bought up in the stock market is, listen, this is extremely important. Everybody understands this. 2025 is going to be a massive profit recovery year for countless small cap and dividend stocks. And I'm going to run you through kind of what's going on with those in just a moment to kind of illustrate this point that I'm talking about, right? So that's going to be huge for these companies. Additionally, when it comes to the Mag 7, the stocks everybody talks about, the biggest weights in the market, you're looking at Mag 7 stocks that are likely going to have earnings per share growth of 10 to 70% in 2025, depending upon the company. Some will be more in that 10-15% range. Some are going to push 50+% earnings per share growth in 2025. So that basically gives you a whole host of the market that's looking very, very good for 2025, and the setup is phenomenal here. Now, to illustrate this point, I thought I would show one of my small cap stocks, Honest. This is a perfect example of what I'm talking about in regards to these small cap stocks turning around their business models from massive losses to actually starting to generate profits and likely going to accelerate that profit growth over the next year. So what we're looking at here, 1000xstocks.com, I'm showing you the charts feature, okay? And I want to show you a few charts to really illustrate what's going on with Honest so you can begin to understand this isn't the only small cap stock that's happening with. This is a lot of small cap stocks. Look at Honest. They were taking massive L's. Quarter after quarter after quarter, they were losing a fortune, right? That all began to change here very recently. 2 of the past 4 quarters now for Honest, they've actually made money on the bottom line. Made money. So they went from taking quarter after quarter after quarter massive losses to now 2 of the past 4 quarters were actually green earnings per share, right? In the 2 quarters they lost money, it was extremely small amounts. Now, additionally, Wall Street has them basically having small losses every single quarter for the next 4 quarters. Based upon what I'm seeing in regards to Honest business model in the past 4 quarters, I think it's very probable they're going to be profitable all those quarters, or certainly the majority of those quarters in 2025, right? And so that's exactly what you're seeing play out with the stock like Honest and why the stock continues to rally and rally and rally. Additionally, check this out. This is free cash flow of Honest. Their free cash flow was so far negative, it was ridiculous. Quarter after money. I mean, they were just burning money. They were burning money. I mean, what did they think they were? Tesla back in the day before Tesla started making all the profits, right? And look at the change up in regards to free cash flow. I mean, my gosh, it just keeps building and building and building. And the last quarter was just a blow off top in regards to free cash flow. Incredible. Look at the operating cash flow of Honest. What a change. It's like night and day. I mean, their operating cash flow was so far negative, it was like below the earth. Incredible, right? And now you look at the operating cash flows company, it's just building and building and building quarter after quarter. I mean, it's phenomenal what we're seeing out of Honest when it comes to that. So if you're wondering why is this stock continue to rally like it is and now it's $8, this is why, folks. You know, they were praised for bankruptcy. They were in the gulag. And now it's looking like not only are they not going to go BK, but now it's just a question of how far could they push these cash flows? How far could they push these earnings per share over the next 3, 5, 7 years? That's very, very exciting, right? So that's what you're seeing in regards to a lot of those stocks. Now, additionally, when it comes to dividend and value stocks, listen, big tech did the huge cost-cutting measures in the second half of 2022 through the first half of 2023. Remember, big tech stocks got wrecked in 2022. You saw countless of those big tech companies down 30, 40, 50, 60, 70, even 80%. And I'm talking the biggest big techs in the world, Netflix, Shopify. Look where those stocks peaked at the end of 2021, and look where those stocks bottomed at in the second and third quarter of 2022. And some were actually in the fourth quarter of 2022. They dropped I'm talking like 70, 80% some of these stocks. Shopify, Netflix, Meta. I mean, the falls were incredible. Amazon, nvidia, AMD. You look at them all across the board. It was ridiculous. So then those companies had to make some tough decisions. Guess what they had to do? They had to get their businesses more in line with what future growth rates were likely to be. So what they went ahead and did, major cost-cutting measures. Because many of those companies, you know, their business models just got bloated. There's no other way to put it. I mean, very, very bloated. And so they did these major cost-cutting measures at the end of 2022 going into 2023. And guess what then happened? In 2023, this specifically in the second half of 2023, all the way through into 2024, earnings per share skyrocketed for these companies. You saw many of their earnings per share up 50%, 100%, some several 100%, some 400%, 1,000%. It was ridiculous on a year-over-year basis. It was like they completely changed their business models, but they really didn't, right? And as far as revenue goes, revenue was decent for these companies, but they really just got the cost-cutting measures through, and that caused their earnings per share to fly to the moon, right? No, these dividend value stocks, they didn't really do those big cost-cutting measures in 2022 and 2023. You know why? Their stock prices held up very well during that time. These stocks weren't really destroyed at that time. People actually were hiding out. So there was really no push to get the CEOs of these companies to really do major cost-cutting measures and the CFOs of these companies, right? There was no pressure on the board of directors of many of these dividend value stocks because they held up very well in 2022 and going into 2023. But that's all changed. Countless of these dividend value stocks are in a horrible place. They've lost and lost and lost for the last 2 years now at this point in time and lost massively to the market, right? So now, guess what's happened here in 2024? The board of directors of these companies have major pressure on them to fix what's going on, and CEOs are getting fired left and right of these companies. CFOs are getting fired left and right from these companies. You're seeing new CEOs coming in for 2025. So all these companies are now doing these major cost-cutting measures here in 2024, right? And they're setting their business models up where their earnings per share is going to fly in 2025, even if they didn't have any revenue growth for their companies. Now, you compound that with a consumer that's in a better place in 2025, and what you're going to see play out is you're going to see revenue recovery for these stocks starting in 2025 and going into 2026, and then you're going to see the earnings per share go up at a substantially faster clip. I mean, you could be talking about 5% revenue growth, 50% earnings per share growth. It's going to be knock your socks off in regards to what happens with that, right? So that's something to kind of keep in mind here. And so there's just a lot of momentum when it comes to kind of thinking about this next move that happens here in the market. Now, lastly here, when it comes to why every dip keeps getting bought up, and this is a little bit more focused on retail and kind of momentum. Trump's coming in office in less than 60 days. There's a lot of bullish momentum around that and what Trump's going to mean to the markets. Obviously, he would be seen as somebody that's very pro-market, lower taxes, those sorts of things. So people are really jacked up about that. Additionally, I'll just be honest with you guys. Not a lot of people were set up as far as retail investors. A lot of folks were not really in a great position to invest in 2022 and 2023 because real wages got destroyed. People were having to spend all their extra wage gains, if they were getting any in 22, 23, on a gallon of gas, on going to the food store and things like that. Well, finally, real wages have started to really get in a much better place in 2024, and it looks like it's going to get even a much better place in 2025. So finally, retail starts to have some money to invest again, right? Which I can tell you a lot of folks in retail, especially if you make, let's call it less than 60K a year, they just haven't had any money to invest. And now retail actually has got some money to invest again, and that should continue to build out in 2025. And additionally, Bitcoin's rolling. Bitcoin is very important just for sentiment reasons. If Bitcoin's doing horrible, likely the market's doing horrible. If Bitcoin's rolling, people feel pretty good about things, right? And so that's another reason things are kind of playing out there. Now, I did a video, was that a day ago or 2 days ago? Stock market melt up 2.0 is coming. Prepare now. And so if you want to just kind of hear more in-depth thoughts about this melt up that's transpiring now at this point in time, you can definitely check out that 37-minute video there, okay? I'm sure you guys got to see these videos, 5 stocks to buy within 30 days, buy the stock and retire, and I spent $95,000 on these stocks today. But if you didn't get to check out this one, the view count's a little lower on that one. It's definitely a very helpful video to check out, okay? Now, next up here, why are some stocks sucking in this market? And then we'll get into what my new stock I bought here today and why I bought it. Listen, traders, not everybody's an investor like me in the market. I look out, I say, this stock, I'm buying it today. It's a great value based upon where I believe the stock's going to go 2 years from now, 3 years from now, 4 years from now, 5 years from now, right? I don't need to make money today in a stock. If I buy a new stock here today like I did, right? I don't care if I make money in that over the next 3, 6, 9, 12 months. I would prefer to lose money in that stock over the next 3, 6, 9, 12 months. You might say, what? That's an investor mentality. Why? Because I want to buy more of that stock. If I looked at today's price, imagine if I could get the stock 10% lower than it was today, 20% lower. I would much rather that because that means I'm going to make a whole lot more money over the next 2, 3, 4, 5 years, right? Now, I'm a rarity. People that think like me, we're not the norm in this market now at this point in time. We're the wolves. Everybody else is the sheep. The traders are the sheep. They've actually always been the sheep, but they're more so now than ever, right? And they think they're getting good gains because they're taking profits on the momentum. And the momentum's where traders want to be. They want to be in the momentum names, right? That's where they go. So they're not going to look at a stock that's doing poorly and say, oh, I'm going to buy that stock because it's going to turn around. No, you can't play that game if you're a trader. As an investor, I could be buying a stock right now that's going to double over the next 2 years. As a trader, you can't do that. As a trader, you're like, dang, man, I think I could maybe make 4, 6% on the stock next week or next month or something like that because this is where the momentum is. So what happens is the traders are just flooding into whatever has the momentum, right? They're flooding into the opportunities that investors like myself saw 2 years ago and have gone up massively, right? And now they're just flooding into those stocks, those momentum stocks. And so the dead stocks stay dead. Now, a year from now, 2 years from now, these traders will likely start piling into the stocks I'm buying right now, right? That I'm buying now, they'll be flooding in those in the future. So the dead stays dead, the hot gets even hotter, and that's what we have going on. And plus, you got to remember, we're going into year end, which means a lot of fund managers are usually underperforming the market. They have to play catch up. How do you play catch up to try to get back to where the S&P 500's at? You gotta go into the hot stocks because you can't bet that. Let's say you want to buy Nike, right? As a fund manager, if you're trying to play catch up to the market, you're not going to buy Nike. An investor like me that's looking out several years can buy Nike here because I don't need it to go up over the next 30, 60 days. But if you're underperforming the market and your benchmark's the S&P 500 and you're a big fund manager, guess what you got to do? You're not buying Nike. You kidding me? The stock's been cold as mold. That's not for you. You know what you're buying? Palantir. You know what you're buying? Nvidia. You know what you're buying? Meta. You're going to buy SoFi. You're going to buy the hot stocks because that's where the momentum's at. And you're thinking, I got to catch up to the market. You're going to buy levered plays in regards to NASDAQ, in regards to the Qs. You're going to buy the Qs. That's what you're going to do. So that's important. Everybody understands that. And that's why the stocks that honestly have sucked this entire year still continue to suck. And the stocks that are just hot are getting hotter and hotter and hotter. And it's like they're just having some blow off tops here at the year end. And you'll continue to see that over the next month, right? All right, now let's get into a new stock I bought here today. Now, as far as my other buys, they were pretty normal in the public count, for instance. I bought Nike here today. That's a pretty normal buy that you would expect me to do in regards to public account there, right? This is a look at the Patreon portfolio. Pretty normal buys in the Patreon portfolio. I bought Nike, I bought Cheesecake Factory, I bought SoFi. Phenomenal stocks, obviously, there, right? But there's another stock I bought here today. And that stock is AMD. I posted this a couple hours ago inside the private stock group. I said, everyone, I just started a position in AMD in one of my portfolios. It's not in the public count or the Patreon portfolio, but figured I would still let you guys know since it's a brand new position for me. AMD started a $27,000 position. I own 200 shares. I hope AMD stays around the level it's at now or goes lower over this next bit of time because I would love to build out a much more substantial position in AMD. And I would love to add this stock to the public account in my private stock group, right? Now, I love to add this stock in the Patreon portfolio as well. That would be amazing. By the way, if you want to see all the stocks I'm buying and selling each week in the Patreon portfolio, I always have that linked in the description if you want to join my Patreon support on there and all those sorts of things, right? Now, AMD, some people have called it recently. I've seen it on there, seen it on X, advanced money destroyer. That's what they called this stock. And the reason being, pull up a 3-year chart of AMD stock, and it's down 10%. 10% over the past 3 years. I understand why people call this advanced money destroyer. I get it. Like if I was in the stock over the last 3 years and I got a negative 10% return, I wouldn't be happy. Now, what if we factor in inflation? Now we're talking about the stock's down 23% over the past 3 years. Negative 23% over the past 3 years. You got a NASDAQ at all-time highs. You got an S&P 500 at all-time highs. You got a Dow at all-time highs. You got all this money being made in the market, and AMD gives you a negative 23% return over 3 years when you factor in inflation. Like, that sucks, man. So I get it. I get why people are frustrated with this stock, why they don't think it's going to make money, blah, 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 blah. As an investor, once again, I don't care. It's irrelevant. If people haven't made money in this stock for 300 years, it's irrelevant. All that matters to me is what I'm going to make over the next 3, 4, 5 years. That's what matters as an investor. And you as an investor, that's all you should care about. Who the freak cares if the stock was up 1 billion percent or down 1 billion percent in the past 10 days, 10 months, 10 years, whatever. It's irrelevant. All that matters is where the company's valued, where you believe it should be valued 3 years from now, 5 years from now. It's all that matters as an investor, right? The growth rates, all those sorts of things. Look at a 10-year of AMD and find me a better stock than AMD in the past 10 years. It's going to be difficult. It's going to be extremely difficult. AMD is literally one of the best performing stocks in the past 10 years. I would say probably a top 10 stock in the past 10 years, if not top 5 stock in the past 10 years. How many stocks have returned you 4,894% in the past 10 years? That's ridiculous, right? So after that crazy move, honestly, it needed to play some catch up. It needed to catch its breath. And that's what it's kind of done over the past 3 years, right? Now, this stage, that sucks. Investors that were in that stock over the last few years, yeah, that stage sucks, right? Revenue's just going down or flatlining quarter after quarter after quarter for a long time. No fun, right? But things have changed. We're now getting major acceleration in revenue, and that's likely to transpire and continue for the next many, many quarters. The fun is now starting in AMD. We're going from, wow, that sucks, to, oh, this is fun. And you got to understand when the flip is happening now. And we're getting hints all over the place in regards to numbers. It's like hint, like this hints, like clear hints it's giving to people like of what's coming here. And people just are missing it right now, right? Now, look at this. If you check here, the data center business, which is what's going to really be taking off like crazy over this next 2 to 3 years because they got so much catch up to play in regards to AI chips and all that, right? Look at net revenue was up 122%. It was up 25% on just a quarter over quarter basis, which is ridiculous. But the up to 122%, that's a hint. We're still early in regards to data center growth for AMD. There's a long way of growth ahead. So it's giving you a hint there. Additionally, the businesses that are down right now, gaming was down 69% for revenue, right? Embedded was down 25%. Now, I believe both those businesses are going to go positive in 2025. And you may say, what are you doing? Like how do you predict something like that? The financials tell me everything I need to know. Check this out. The gaming revenue down 69% year over year. It was actually down 29% on a quarter over quarter basis. So down a much smaller percent versus on a year over year basis. So that business is already in a bottoming process and is likely going to inflect higher in 2025. It's just a question of, is it the first quarter, second quarter, third quarter is going to inflect higher, but it will inflect higher, right? Additionally, look at the embedded business, down 25% on a year over year basis. Now fun, but look at it on a sequential basis, up 8%. So embedded has already, in my opinion, bottomed. And you're going to see that business inflect higher, likely in the first half of the year. Gaming's a debate if it's going to inflect higher in the first half of the year or the second half of the year. Embedded, there's really I don't think there's really any question. Like that's going to inflect higher in the first half of the year. So it's already given us hints that those two businesses are going to turn. And then obviously the data center business is taking off like a rocket ship and will continue to for the next several years in regards to that. And that's where the big money comes from. So you're going to have big money flying. And then you're going to have little money businesses turn and inflect higher in 2025. So it's going to be hard to poke any holes at this one, right? So remember the ultimate guide for how a stock goes beast mode over a 1 to 2 year span. There's a few things, really 5 core things to have a stock go beast over a 1 or 2 year span. One is you start having revenue growth as a business as a whole, 20% plus. Second, have your earnings per share flying at a much greater clip than your revenue. Third, have your gross margins increasing dramatically. Fourth, have your bottom line net margins increasing dramatically, right? And the last one is have a stock that's sleepy. All of that's AMD. They're going to grow revenue 20+% next year. The earnings per share are going to be flying much greater extent. Gross margins are going to be moving up substantially for the company. Net margins are. And the stock's been sleepy. I showed you a 3-year chart of this, but look at the year to date. Like, what a setup. The stock's down 4% this year. Like, what a setup here. Oh my gosh, is it set up well? Now, NVIDIA, NVIDIA is not doomed. You got to understand that. NVIDIA's got banger numbers. Their numbers are going to be even way better next year. And their numbers are going to be good in 2026 as well. It's just they're going to have a major deceleration of growth rate in 2026. So they're not doomed. However, you got to understand NVIDIA is likely to significantly underperform AMD stock price 2025 through 2027. And the reason being is AMD's already gone through its hype cycle now. So AMD's pounding out these great numbers, but people are just kind of like, yawning at them, right? Which is exactly what happened in this latest quarterly report. It was an A+ quarter. The guidance was phenomenal, and people said, put me to sleep, because NVIDIA's already gone through that hype cycle now, right? So now the gains are just tougher to get in regards to NVIDIA. AMD hasn't gone through the hype cycle yet. That starts in 2025. So the move you're going to get in AMD stock price over the next, I would say, 3 years is going to be pretty substantial in my opinion, especially if you compare it to NVIDIA. I don't even think it's going to be remotely close in regards to that. So a lot of fun coming in that. Hope you guys enjoyed today's video. I appreciate y'all joining me. Black Friday sale, it's going on this time next week. If you want access to the sale, pin comment down there, enter in your name, your email, and if you want to put in your phone number so you can make sure you get the deal, it's 1 day and 1 day only. And when it's over, okay? So if you want to make sure you for sure get the deal, enter in your phone number. We'll text over the deal when it drops on Black Friday. Now, for a lot of you guys that, obviously, if you're an experienced investor, like 1000X looks like the best product ever for you. If you're an experienced investor, because of all the features, how we lay everything out, right? It's amazing. Like it's an easy sell if you're an experienced investor like myself, because it's built by me, right? So if you're an investor in the market, like in your experience, like this is the ultimate product to have. There's nothing better than this. But I understand for some people that might be newer to the market, maybe in your first year or two of investing, you're like, oh man, 1000X looks cool, but I don't know, I'm confused. I've set the product up in a way that even if you're a newer investor, like you're in your first year or two, we've got several things to help you out immensely. One is metrics. So if you're looking at all the different metrics we have, which it's ridiculous, like how advanced we really go with the product. If you're confused, we lay it out and explain with examples exactly how each metric works, how it's calculated, real world examples, stuff like that. Additionally, we have the education portion, which teaches you how to decode a balance sheet, income statement, cash flow, how to perform SWOT analysis, strengths, weaknesses, opportunities, and threats of a business, how to understand if a company has a strong moat around the business versus a weak moat, how to value dividend stocks properly, how to value growth stocks properly, dividend investing 101, portfolio management, how to run a portfolio properly, which is another level up, right? So we teach you all that in 1000X. So I understand, like, advanced investors understand this is an amazing product, but for those of you that are newer to the market, your first year or two, understand this product is also built for you. Don't think it's only for the super experienced folks, okay? Okay, once again, that's pinned comment down there. Enter in your info, and we'll send over that deal for the one-day sale. Much love and have a great day.